Hi everyone, welcome to another Weekly Forex Forecast. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to discuss the EURUSD, the Pound USD, as well as the Dollar Yen. We're also going to take a look at the Euro versus the Yen and wrap things up with Gold or XAUUSD. The risk-off scenario is still playing out, which means we could see the Dollar Yen and the Euro Yen move lower over the coming days and weeks. Alright, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. First up, as always, is the EURUSD. And if you remember, we had previously been watching for a breakout from this terminal pattern based on this ascending channel bottom and this descending channel top. Now, the pair did try to break out to the upside back here, but instead formed a bearish pin bar. All right, that sent the pair lower and also triggered an eventual close below this ascending channel support right around 110.75. Now, I pointed this out on the blog and said that the next key support level to keep an eye on was going to be 109.90 based on these two lows back here. Now, notice where this past week touched right off of 109.90, and I also commented on this on the blog and said that we could see the pair reset itself before the next leg lower. But instead, on Friday, we got this massive rally. And as of right now, it looks like the pair has closed back above that ascending channel bottom. So how significant is Friday's close back above this level? And it's all going to come down to Monday's open, because a lot of times on Friday, you get lower than usual volume, which means that sometimes moves are not as reliable as I'd like. So it's going to come down to where we open on Monday. If the pair gaps lower, or if we gap higher or about at Friday's price, either of these two scenarios could be bullish for the pair. Now, if we open down here, that could be bearish and it could keep this level intact as resistance. All right, so it's all going to come down to where Monday opens. But as of right now, I would not want to be a seller here, because anytime you get an aggressive move back to a key level like this, all right, I've talked about this before, where look at the limited space between this move lower and the retest. Ideally, if we saw a move higher, I would want to see a gradual move up here into 110.75 or so, and then get some kind of bearish price action and then look for a short. But as of right now, we came down, retested 109.90, and then just took off higher within a matter of a couple days to retest that channel bottom. If anything, I may even look to buy the EURUSD if we do open on Monday somewhere around Friday's close, and then start to base in this area. Okay, so if we get some type of price action on Monday that suggests that this was not a false break back above resistance, then I may look to actually buy the EURUSD while above this 110.100 to 110.75 area for a move back into this 111.75 level, which also intersects with that descending channel top that extends from the 2019 high. All right, so it's all going to come down to Monday's close, but if anything, if we see the pair base above this possible new support area, I may even look to buy the EURUSD. I am not going to be a seller here just based on Friday's candle alone. Next up is the British pound against the USD, and this one took off to the upside in a big way last week. All right, both Thursday and Friday gained significant ground after retesting this confluence of support right here around 129.80. All right, so I mentioned this trend line that extends from the November 2019 low several times on the blog, and we were also watching this ascending channel support. So notice how this ascending channel has directed this short-term uptrend. All right, now the idea for shorts was contingent on a daily close below this ascending channel bottom. And as you can see, we never even closed below this trend line here. So the short idea was never in play. And as you can see, based on Thursday and Friday, the pound, just like the euro, could be a buy in the week ahead. As for immediate support, that 131.70 level needs to hold on a daily closing basis, in my opinion. So this was the level that capped this recent advance. So this advance right here, and you can also see where 131.70 was resistance through this area, and then also some back here. Okay, so 131.70 is going to be the level that buyers need to defend now in order to push the pair higher, perhaps up into this 133.40 level. Okay, so that was the closing price back here and has also been a significant level over the past few years. All right, so 133.40 is going to be the next key level to keep an eye on to the upside, followed by this area just above 135.00, and that's based on this high back here. Now, if we do see the pound close back below 131.70, that could be bearish, and it would also re-expose this trend line followed by ascending channel support. All right, but as long as 131.70 support holds on a daily closing basis, just like the euro, we could see the pair move up here into 133.40. But just like the euro USD too, it's all going to depend on where Monday opens. If we see the pair open either at Friday's close or above it, that could be a bullish sign. All right, it could mean that we could see a retracement into 131.70 followed by a push higher. However, if we open the new week way down here, that could be a bearish sign for the pound. Most of my focus last week revolved around the dollar yen, and that's simply because we recently saw a false break to the upside of this trend line right here. So this up here looked to be a false break, and I mentioned this pair twice on the blog last week. So notice how this trend line actually dates back to November of 2018. All right, so this trend line right here was key for buyers to hold in order to push the pair higher. So it capped the pair right here. Then we saw the dollar yen close above it through this area. However, this consolidation, okay, even though this is an uptrend, this consolidation did not do buyers any favors, because what we had was an ascending channel here that even once the pair closed above this trend line, buyers had to deal with the top of this channel, and they weren't able to, and instead sellers pushed the pair all the way back down here to close below this trend line. So once we got that close below the trend line, it meant that this move right here was likely a false break. And as I've mentioned before, a false break to one side of a level often triggers an extended move in the opposite direction. So on Tuesday, I wrote about the dollar yen and said to keep an eye on 109.27. So 109.27 was the Friday close, and a lot of times when you get a gap lower like this, the previous close becomes new resistance. So in this case, Friday's close was resistance, and this candle right here, Wednesday's session, put in a high of 109.26. So 1 pip below Friday's close that I mentioned, and I managed to get short at 109.22. All right, so I'm still short this pair, and I even added back here when the pair came up and retested this resistance area. So I'm still short here, and as I mentioned last week, I am looking to take off some around 108. So that's this ascending channel bottom. However, I do think that the dollar yen could break this level and even head lower, perhaps down here into 106.80. All right, so 106.80 has been a key level for several months based on these lows back here, these highs, and also this low. So as long as the dollar yen is below this trend line and the risk off scenario is still playing out, which it is, I favor selling the dollar yen for a move down here into channel support and perhaps 106.80. Now, if you miss this entry back here, it may be best to either wait for a retracement up into some of these lows or perhaps waiting for a daily close below this channel support down here. The euro yen is another one that suffered due to this risk off scenario that's playing out. So I talked about this one on the blog all the way back here when it retested this channel bottom. And I said that this uptrend was contingent on this ascending channel staying intact. So notice how we had this retest of 122.60 back here. And we also had repeated retests of channel support. So as soon as I saw the pair rotating lower, coming back here to retest channel support, I got short at 121.63 because repeated retests of a level like this often signal an imminent breakdown. All right, and that's exactly what we got with this candle. Now, last week we spent most of the time just consolidating between these two areas. All right, and that's largely due to the yen strength, but also the euro strength that we just covered. So as of right now, this pair is kind of locked in this sideways consolidation. However, if the risk off scenario does continue to play out, in other words, the dollar yen continues to move lower, we see risk assets like stocks also continue to push lower, the euro yen could be one to keep an eye on, as we could very well see another leg lower for the pair. Now, remember too what I mentioned last week, and that is that this support level down here at 119.20. All right, so based on this low back here and these highs, that this level could be up here just based on some of these highs and lows through this area. So notice these highs back here, okay? And then we also have this low. Now, if we draw it a little bit higher up, you can see where the euro yen appears to have actually found this support area last week. All right, so again, I think it's going to take a break of this consolidation in order to see the euro yen move lower. We could alternatively see a push higher, an eventual retest of this channel bottom. That's also a scenario if we see the euro start to strengthen and the yen weaken a little bit. So if we do see the euro yen start to break to the upside from this consolidation, I may look to take off my short from up here around 121.63. All right, now on the other hand, if we see a move lower, we see the euro yen rotate lower and start to close below some of these areas, I will look to add into my short position for an eventual move down here into the 2019 lows around 116.20. Now, just keep in mind that it's going to take weeks or even months for a move like that to play out, and there are also no guarantees. For all I know, we could see the pair come up here, retest channel support, and even close above that level. But as of right now, based on this sell-off, the break below ascending channel support, and this recent sideways movement, it does appear that the euro yen could move lower either this week or next. I wanted to wrap things up with gold, or XAUUSD in this case, because we have seen that risk-off scenario play out, and not surprisingly, we've also seen gold rotate higher. So the last time I talked about gold was 2 weeks ago, where I said that this 1550 area, all right, based on these highs back here, was support, and also that if we saw the pair start to take out some of these highs back here, we very well could see a run at 1580 once again. Now, notice what happened last week. All right, the pair came up here and retested 1580/90. Now, we had this retest right here. We had this big sell-off, but then look what happened. The pair came right back to this area, even formed a bearish pin bar on this candle. However, one thing about pin bars is that if they occur in sideways consolidation like this, where the tail of the pin bar doesn't even stick out above the price action, that is not a sell signal. Okay, this is just sideways consolidation. If we had seen a pin bar like this, right, where the wick came out above this level, that could signal a rotation lower. But as it is, Thursday's candle was caught in this sideways consolidation. And furthermore, you can see where Friday may have even broken out above that 1580/90 area. So if buyers can keep this momentum going next week, the next logical level to keep an eye on is going to be this recent high just above 1600. Okay, so maybe around 1610. That's all going to come down to where Monday opens. So just like the euro and the pound, we had a big move on gold last week. So Monday's open is going to be key. If we get a close just above Friday's close or at it, that would be bullish for the pair and could signal a move up into 1610. However, if we gap down, all right, and catch resistance at 1580/90, that could signal a rotation lower from gold. But as of right now, based on Friday's close and based on this price action right here, it does look like we could see a break above 1580/90 for an eventual move up into 1610. And last but not least, keep in mind that this market is still in a very healthy uptrend. All right, so we've seen gold move higher now since August of 2018. And we recently even looked at this falling wedge that formed back here, and you can see how this thing has played out beautifully. So we had something similar back here where gold consolidated, right? It got squeezed and then eventually broke higher. So the same thing happened back here where gold got squeezed And we talked about this several times on the blog. I mentioned gold several times throughout this area and said that a break higher would target these highs up around 1550. Okay, so same thing as back here where we had this consolidation and then the breakout. So as of right now, we have higher lows and we also have higher highs. Okay, so if you're trying to sell gold, you are going against the momentum. Right now, the momentum is bullish, and that's going to be the case as long as we continue to see this market carve higher highs and higher lows. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.